good afternoon, good evening. No clue what time you're watching it, but it's St. Patrick's Day. I know that a lot of people are going to be eating green food that doesn't need to be green, and please don't post that shit online. Green beer, again, same thing, but St. Patty's Day, when we are through OPEX and we are heading into the FOMC meeting. The FOMC meeting is on Wednesday. On Monday, we have the Eurozone CPI, the 6-month and 3-month bill auctions. Monday night, we have the Bank of Japan's rate decision, who are going to be raising rates for the first time in 17 years from 0% to 0.1%. When it takes place, they're discussing it. They're not really there yet. And on Tuesday, we have a bunch of Euro speakers, and we get the housing numbers, the 52-week and the 20-year bill auction on Tuesday. And then Wednesday is the big daddy, the FOMC meeting at 2 o'clock in the afternoon. At 2:30, we get the press conference from Jerome Powell, and typically at around 2:45, we get the question that comes from Bloomberg. I'm not saying anything about it, but historically, that tends to be the moment the confirmation move takes place, because you will zig and zag and bounce and drop so much between 2 o'clock and 2:45, and then you get your 1 hour into the close to get your move. On Thursday, initial jobless claims, blah, 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 current account, S&P, services PMI, manufacturing composite, home sales, 4-week bill auction, Fed's bar, the 10-year. But on Friday, you got a plethora of ECB speakers, and before the open on Friday, we have Jerome Powell. Now, going back to last week, where, I really need to do a better job, because I spent a little bit of my day going back and checking everything. I've only given 3 dozen better than 100% trades this month. So we're halfway through the month. So I got to up my game and make sure that I can get at least 5 dozen over the course of the next couple of weeks. But as we went out on Monday last week, sent out the email, 10 weeks have passed for 2024. 7 of the 10 have closed down on Monday's start of the week. The last 6 have closed down on Monday. So the risk trade, expecting a minus 51.2369 close, was the 51.30 calls, 51.25 calls. They were paying at the moment $2.50. And going into the spreads, because again, has not been a fantastic month. We had 400% trade over there on the risk trade on March, whatever that is, for another 400% trade on Friday, March 8th. Unfortunately, the 51.45, 51.40s I gave 3 days ago only made it to 150%, as well as that 100% end of the day there on Friday on the puts. But as we had there on Monday, we opened at 51.1196, dropped to our low of the week at 50.91, and we closed green. We closed green last week, Monday. Getting into that closing green. Oh, I apologize. We closed red. My bad. We closed above the open, but we closed red below the previous day's close. The Friday close, we closed red below it. So that number, which I'll put in the email, is now 11 weeks that have passed. 8 out of those 11 have closed down, and the last 7 Mondays have closed down. As we went into these last 3 days, and I put out that this is Quad OPEX Friday. I don't like these Quad OPEX Fridays. I don't like them. And we have a case for either way. And as I put there on the bearish, The only way that this gets bearish is if you're going to gap down below that 10-day moving average, which was exactly what you did with that minus 27 points, as you were already up on the day, a little bit more than 10 points, 11 points going into that PPI report. Only a 32-point range, but more importantly, is significant, is right here. We did not waste a weekly candle and close it red. We closed green for the week on the candle, plus 5 points on the week. Closed below the previous week, but we closed green on the week for what it counts. We closed above the open from Monday morning. So we got 3 red closes in a row. We don't get 3 red closes in a row. We got 3 red closes in a row only when we began the year, which was coming off of that red close at the very last day of the year. That was 4 in a row. So mind your P's and Q's, because, again, you're playing a video game, whether you like it or not. You got 3 red closes in a row, and we're going into the FOMC meeting. An 88-point range, 89-point range, but this is more significant that I want to show here. This is only a 132-point range month. That's it. That's all that we have done, top to bottom. 51.89 came in there on March 8th. 50.56.82 was there on March 5th. That's all we've done. And we have avoided closing below 5,100 virtually every day of this month, other than there on March 5. So mind your P's and Q's. Over onto the spreads, again, plus 1%, plus 1%. We've not had a minus 1% day since that big drop on March the 5, where we closed below 5,100. And on that next day, as I had explained, minus 1% get followed by plus 1% days, 51.27.97, 51.29.44. We missed plus 1% by 1.5 points. So the algo is there. The algo is undoubtedly there. We had that plus 1% day there on the CPI there on Tuesday, and we virtually just chopped during the course of the week. And again, bringing you into your chart, and one of those things that you just have to automatically already have in your head, because we have talked about it so many times, and I only see 2 handfuls of people that are either posting it in the public room or sending me private messages, that when we are getting these 5170 opens, they're jumping right into the 5150 puts. When we are getting up into those 5170 areas, they're jumping into the 5150 puts. Tuesday, different day. Again, here on Friday, we had our drop right down to where we needed to get to. And like I said, take it off. Take your money. You're done. Day's over with. And what you'll see when we go over to the charts really quick is nothing. But before we go there, again, financial juice, trading on a computer, you want to have this on, you want to click on that tick strike, and you want to avoid any of that stress and anxiety, unless you enjoy that stuff, by being able to listen to the market move. You can hear the market moving up, you can hear the market moving down. Remove the stress, remove the anxiety, or you can literally do that by not playing the 0 DTE stuff, unless, again, you're doing the credit spreads. QQQ, minus 1.5%, minus 1%. The move down now from the February or the March 8th, last a week ago Friday's all-time high, as it dropped down to 439 on that day, a 10-point range. The move down is now 3.5%, and I'll show you in the most non-offensive way where we are. But again, 3 red closes in a row, something to be very, very, very cautious about as we head into the FOMC meeting on Wednesday. So what do I have left? Oh yeah, I can leave here with Bitcoin. Bitcoin, again, I got nothing to say to you guys except what I said already, that if you're not taking profits on that 70,000, you're a fucking moron. You deserve what's coming to you. FOMC on Wednesday. Again, I just want to reiterate, as you can see here on the spreads going back to the January 31, FOMC, FOMC. I will not be posting a credit spread for FOMC day. There will not be any spread posted in the spread room on FOMC day this Wednesday. And the reason why is even if you're going to get a $4 credit, you're going to risk $100 per contract. Even if you're going to get $3 credit, you're going to risk $2 per contract. This is not from an FOMC day, however, only because I couldn't find the ones from the previous FOMC days. It gives you the understanding about what we're talking about. This was here at 1:30 in the afternoon, back here on December 20th, 30 cents. Post that I put in there around 2 o'clock was the 47.60 puts were trading at 60 cents. They ended the day at $59. So on FOMC day, as we approach 2 o'clock, as we start getting into 2:30, this is where your attention should be if you're going to be trading the FOMC. You can trade the 0 DTE. You can trade the 1 DTE. You can trade the Friday, March 22. Those are the shortest term periods that I would be involved with. I wouldn't waste time buying next week. If you're going to buy next week, go and buy April 19th, go buy May 17th. But this is an example of what you'll be experiencing come Wednesday. So put your eggs into the basket and get them ready for Wednesday. Because Wednesday, 2 o'clock, and I've even got a clip for you because I know some of you are going to have to go to work on Wednesday. Some of you are going to have meetings on Wednesday. Here's a way that you can not have to do that on Wednesday.
Do you not want to be at work today? Just shit your pants. Shit your pants. What are they going to do? What are they going to do? You just shit yourself. Shit your pants. And then go home. And have a good day off. That's what I would do.
I'm telling you, it's effective. So let's get on to the charts. Let me move down here and we will start off with the SPX. Now the SPX here, I'm looking at the month of March. You don't need to go and study more technical analysis so that you can better take advantage. We're in a fucking chop zone. This is where we've been. Recently getting up to that 51.75 area. And every time that we get up to it, we sell down from it. We came up to it, we sell down from it. We came up to it on CPI, we sell down from it. We're not breaking that 50.90 still. And that 50.90 is the most important for now that needs to be visited and needs to be broken. Everybody is still looking at this as an ABC. No C until you get a break down below into this 50.90 area. Then things start to change. And let me just put this on here. I spoke at the beginning of the year saying how I expect 2 rate hikes this year. You've just now had 2 very bad inflation reports, January and February. You now have Fed speakers that are voicing themselves, talking about rate hikes. At 2 o'clock, when the meeting adjourns and they make the announcement, they will be announcing at 2 o'clock how many members voted for a pause, how many voted for a cut, how many voted for a hike. And I can tell you right now, if you see better than 2 that voted for a rate hike in this meeting that takes place this week, we will have the gasoline in the engine. We will have the ability to be able to get that 50-50 or that 50-90 broken, that 50-50 visited, come on down here into this 50-50 zone and then start to pressure what really needs doing, which is this 49.20 area. 49.20 cannot get broken unless you get into this 49.80, 50-40 NVIDIA earnings gap that was created a little bit more than a month ago. So that's your bigger, broader, wider picture of things. Zoomed in, obviously, we're going to be as zoomed in as we can be, and that's going to be this 50-90 and above here in this 51.50, getting short anytime that 51.75 shows up, and having the FOMC meeting confirm that this is still the play as we go into the end of the week. Come over onto the QQQ, and again, shared this chart with a lot of people that have mentioned QQQ. Actually, I went through the entire chat, search QQQ, and anybody that ever sent me a message about QQQ, you guys saw there, you got a message delivered to you on Friday sharing you this chart. What are we calling this? We're calling this fucking sucks line, the 433.50. And as you see here, this is your 433.50. Your 433.50 sucks because we haven't been able to bust down below that. And here's your big, as you remember, we're getting oversold. We're getting oversold. The charts are set up for NVIDIA to report earnings and just face rip this market. That's exactly what took place. And we are still messing around in this zone. We're below the 10-day, below the 5-day, which are inverted bearish. We're below the 20-day. And the 50-day sits down here in the middle of this, well, middle of this NVIDIA gap, right down here, which fills right on below 425.61. 425.61 is just a flesh wound. That's all that it is. You got your NVIDIA earnings lows down here at 421.63. Your bigger, much bigger picture, okay, is that 421 is your big break. You get past that 421, and once again, coming in here to, I'll make it simple because you're looking at like too much FOMO with all the gaps that are down there. We get through this gap. We press on that 421. 416 is where we start to look. And again, like I've mentioned before, the bigger, broader, wider picture, looking out into May, is a very good possibility that we could be seeing that 402.92. 402.92, a little bit below that into that 395 area. So it's on the table. Nothing is executable or actionable until we can get through this 433.50. And then we start looking at this as being the first move down. And then with the bounce, being able to see the bigger move to the downside. Unless this is our first move down, this is our bounce, and now we're looking for a drawdown much lower, which we can do that in real time here. We're not going to have accurate to the penny, but we'll look at it here on real time. Here's our drawdown. Here's our bounce. Come on. Clicky. So yeah, around that 417, 416 area. Very, very possible. What I've seen on these major moves to the downside, they tend to break below the 200 extension and they tend to go targeting somewhere around the 250. So again, possible. Looking down here into the 409 region, bring in a little bit more of a study. And right there, you'd be looking roughly at your 100-day moving average, with the 200-day moving average well below down there at 386. So again, we're looking at this from what it is, what's possible, and the reason why is because we have been chopping. I will try that red star. I'm just a little bit slow with the studies going into that. For now, with the QQQ, we continue to hold 433.50 and we continue to fail up above that 442. Game hasn't changed. IWM, Little bit of weakness, having gotten that 207.21, a little bit of a breakdown into the low 200s on Friday, but still no break back down below 199.40 to be negative on the year 2024, touching and testing that 50-day moving average with still having this gap from way, way back on February the 13th. Don't remember what the reason was, but I'm pretty sure I can find that pretty quickly. The 100-day and the 200-day moving average being way down here below the 190s. So again, we're playing with fire over here, and as you can see, you're getting a little bit more of an advantage to the downside on the IWM as compared to over there on the QQQ. So since your small caps always lead the way, we will see if we lead the way down below that 199 and below that 198 this week, which will then start making everybody extremely happy that they have been taking advantage of the April 19s. Caterpillar. I sent you out the email on Caterpillar on Friday. Little clip, little video. I am not executing any kind of a trade on Caterpillar at the moment. I'm putting this out there for everybody to get exposure to Caterpillar, get a look at Caterpillar. McDonald's, we traded 6 times. 6 times this year. All because of the initial trade at the very beginning of the year. I get half a dozen messages this week of people telling me thank you for McDonald's. I get another 3 or 4 messages saying I didn't know McDonald's was a buy. Caterpillar, get familiar with it. And what I would be looking at the lowest would be the 330 strike. I would not look lower than 330, and I would not be looking at 1 week or 2 weeks. I would definitely be looking further out, making sure that I'd be protecting myself. And again, with 330 being the target area, the lowest strike I would look is that 330. Getting in up here in the 340s, even better. But that 330 would be the downside target that I would be looking for with an extended period of time, something towards the end of the month. Actually, the end of the month is going to be Easter, so the early part of next week, very similar to what happened there with Microsoft, like you saw. Microsoft, I sent you out the email there on Thursday. Check out Microsoft, 550 over here on the 420 puts for April 5. You got over 100%. I posted there in the trade room, the trade ideas room, which is specifically for the 32 trades. The 400s would be the lowest strike that I would look. They were trading at $1.39. You got 370 here on Friday. It doesn't take a lot of effort to take advantage of this stuff. So I will move you on to the VIX. And no, we're on JP Morgan. JP Morgan, again, same thing. It was a couple of weeks ago, I sent out the JP Morgan watching for that 193 area. 193 almost hit. Well, you might as well call it hit. And then they got that news report that came out almost immediately after it that they got fined like $500 million because of, shitty trades and not putting trades through and fraud. They've had more. It's not JP Morgan alone. All of these banks have multi-million-dollar penalties that they pay every year for fraud, for misquotes, for misreporting. But right around here, where we were back at the old all-time highs at 173.38 from way back in October of 2021, we were trading the hell out of this. Right here is your earnings date, where, like I said, I will make JP Morgan my bitch, and that's exactly what took place on that earnings day. Right around here was when all of the SEC filings started going through, the Form 4s of Jamie Dimon's family selling JP Morgan stock for the first time. I don't know if it's ever or at least since 2009. And here's JP Morgan just going up. The dumb money flowing into JP Morgan. The FOMO just chasing it up here. 170, 169, that's my downside further out. As I've said before, we've got earnings that are going to be coming out the second week of April. I'm in no rush whatsoever to jump into JP Morgan. When earnings come out on that Friday, the second week of April, we will be making JP Morgan our bitch yet again. The VIX, above the 200 fractionally. We lost it middle part of the day there on Friday. 10-day, 20-day, 100-day, and 50-day. Like I've said, guys, you get that VIX 1339 show up to you, you better fucking take advantage of it. And that's exactly what took place there on Thursday. Exactly what took place there on Thursday. So we're hovering here in what I would consider to be no man's land. We're right at 1451. We're holding 1410, but we're below 1542. FOMC meeting is on Wednesday. On Wednesday, we'll have a lot of answers that will take you into April, take you into Easter, take you into the beginning of the next earnings season, which is in the middle of April. A lot of answers will be given come Wednesday. More importantly, a lot of answers will be given by the end of this week. Looking over here at the dollar, the DXY. Big move from last week Friday's low back up here above 103.40. Still below the 50-day, the 20-day, the 200-day, and the 100-day. But you're making a very, very strong, aggressive move on the dollar. So a lot to still be seen, but holding above this 103.40 is a little bit of a warning to the bulls over there in the market and what's been taking place on that. Come over here onto the 20-year, over here at the 10-year, the TNX. Here's your lows right there at the end of the year, right there at the end of December. Here's your reaction after the FOMC meeting, going into the FOMC meeting, right there that final week. Rate cuts, rate cuts, rate cuts. Shitty CPI report. Another shitty CPI report. And here we are with the 10-year above the 50, 10, 200, 5, 20, 100 day. Just about to embark on highs of the year. And an enormous amount of space to the upside. We start looking at this 10-year climbing up here into 4.5, climbing up to that 5. Guess what? That's your October lows on the SPX. 2 rate hikes. I'm still calling for it this year. 2 rate hikes. And there's your JP Morgan. So yeah, that pretty much leaves you off. Where I will leave with that is, let me pull this back, get rid of that, and pull this one back and get rid of that, and go on to my main screen. Apologize, I'm not a video technical wizard, no, blah, blah, blah. Looking here on the futures on the 1 hour, which is, wow, I have this all day, every day for 7 years. Nothing got oversold. Nothing, which is good, because what it is we are wiggling the technicals. We're wiggling them down so that we're not getting into that aggressive oversold area. Closed on the lows, 10-day lows over here on the NASDAQ, obviously, because we got down below that 433.50. This gap on the ES from when contracts rolled over a week ago is still unfilled, right around that 51.32. The NQ filled the gap. YM, nowhere near the gap. Russell 2000 was the first one to fill the gap. So the weakness is there. Come on over onto your main 7. Big move over there on Google. Like I said, I was watching them put money into Google. I was watching them put money into Apple, although, it's truncated because you can't get it past 175. I was watching them put money into Microsoft. And again, this Microsoft is why you see I wanted to send that alert out to take that trade. And then I've been watching AMD just get its ass kicked, watching NVIDIA go nowhere, watching over here with Amazon playing its part, but not being able to hold up in that area, very similar to Apple. And then you've got your Tesla, 160, making its way down to that 150. These are your main weight names on the NASDAQ. These 8 names make up greater than 50% of the weight on the QQQ. So, like I say, guys, there is a lot that will be answered. And again, apologize for not having been able to provide better than 3 dozen 100% trades during the course of this month. I'm not talking to everybody. I'm only talking to pikers. But yeah, again, this is why I'm doing it on the big screen, is to show you this is a TV. This is the amount of data you can throw up on a TV. I'll pull over my other chart. Here, this is my other screen. You got a lot that you could put on there. McDonald's always in the same spot, right next to Caterpillar, which is right underneath Home Depot. Got JP Morgan right next to McDonald's. I see it every day. Never changes. Pull over the other one. Where are you? Here we go. There you go. Here's the other TV. Got my Nikkei, got my FTSE, got my DAX, Russell, SPX, NDX. Sorry, not the DAX, the Dow Jones. Looking at the 4 hours. Here's my crude. Got your euro dollar, the Hong Kong market, just because I watch it. Here's your Bitcoin, Ethereum, dollar. Here's the US dollar, Japan, the yen, British pound. Here's your Dow trannies, TLT. Here's your gold. Over here, I get to watch where all the contract volume is on the ES. Over here, I get to see the big trades that are greater than 50 blocks. You want to have TVs, guys. You want to have TVs as your monitors, not using just regular little monitors on your screens, because at the end of the day, this is what it's capable of giving you. So enjoy your Sunday. Enjoy your St. Patrick's Day. No, I am not shutting the site down. No, not at all. I was just really kind of, what the fuck, man? It's a beautiful goddamn morning. Why am I not able to enjoy these mornings every morning? And the reason is because I'm staying awake until 4 o'clock in the morning, doing this zero DTE shit. Well, FOMC days, yes. Other days that aren't FOMC days, after lunch, you're on your own. Enjoy your weekend. I will see you in the chat room.